Steve Tusa of J.P. Morgan, you are sticking by your $6 target for GE. Do you think that when you sit down with Larry Culp on March 5th, there will be any way that you can say maybe go to a $7 target? Because this stock is taking off without you, my friend.
Hey, guys, how's it going? First of all, it's been a while.
Too long.
I think back in December when the stock was at, I think, like 672, but who's counting? Our view was that, we've never called this a liquidity crisis. We've never said the stock was going to go to zero. I think that was always kind of a straw man bear case that the bulls put up there to say, hey, it's not as bad as, Tusa thinks or whatever. At that point in time, our view was, we love Larry. I think Larry is a phenomenal CEO. I have personal affection for him. He's a fantastic guy. And, I know he's a credible person, and they weren't going to kind of sit there and do nothing. So our view there was that they could come out and say some things, and people would, buy into it, believe it, and the stock could move up from there based on narrative and sentiment. I think where we are today has gone way too far on that front. Our price target remains, $6. So clearly a decent amount of downside, and that is really based on the view that, yes, this is a company that can absolutely take care of its balance sheet over the long term. Again, our price target is not zero, but the run rate of fundamentals for this company, as we've been talking about really for the last 2.5 years, earnings are too high, estimate-wise, from a consensus perspective. A little bit of a misleading valuation based on consensus, and cash is way too low, and going lower with these diluted divestitures.
Steve, first of all, you buried the lead. Your point number 3 about how they made a smart, more effective move, I thought was terrific. I would have put that at the top. But let's talk about page 8 of the GE 2018 annual report that came out. How can you not like the fact that he just in one page has all the segments and he's using real profit and loss not adjusted? And then I want you to react to this. I don't know how to say the guy's name, but Ernst Krage, a GE Power leader, wrote to me recently, this is Larry Culp saying that he felt GE's attitude right now is reflected in the famous proverb, the beginning of wisdom is to call things by their proper name. Why don't you give him that benefit of the doubt? Because you do love him, you have personal affection for him. Because when you start realizing the reality of the situation, come on, that's the bottom. Why don't you go with that?
Yeah, I mean, I think publishing a 10K and, having putting in that 10K philosophies about how you run a big business longer term is not necessarily grounds for a higher market cap or a stock price. I mean, at this stage of the game, the math is the math. And, we can talk about narratives around how great strategically they're going to operate the business over the long term, but fundamental realities and math run counter to, a narrative that says, hey, they're going to be honest. I mean, so the company is honest, and that means that they deserve a $150 billion market cap instead of a $100 billion market cap. I mean, I just don't think that makes any sense whatsoever when it comes to, how we value stocks. It's all right, good, but it's not you don't just get an entitlement for saying, we're going to call it what it is and we're going to operate, above board. I don't think that has any relevance to where a stock is trading.
And I understand that, and I think we do too, in terms of looking at the fundamentals, as you say, Stephen. But I do wonder, psychology plays an important role here too, one would think. And it does appear that there, at least for the first time, is, I wouldn't call it necessarily momentum, but a sense from the investor base that he has his arms around some of the problems and is fixing them. Is there a chance that people just look through this next year's earnings and look ahead to when Power actually is on better footing? The optionality that they have given themselves as a result of this deal with Danaher, the ability not to have to fire sale things, aren't those important elements that conceivably would lead the stock to never get anywhere near your $6 stock price?
Yeah, so you are absolutely positively hitting on the right things, 100% hitting on the right things. Right now, okay, this next year, I believe, kind of the free cash number that you're going to put up for this company will be somewhere between, if they had IPO'd all of healthcare, would have been probably below zero. and next year it's probably going to be kind of in the $1.5 billion to $2 billion range, or roughly 15 to 20 cents. I can tell you right now that $10 per share does not reflect where fundamentals currently stand. They are giving a massive amount of benefit to a significant swing at Power from negative $3 billion in free cash to probably about $1 billion plus of free cash over the next 3 years. And they are also assuming that GE Capital is zero. The average company in my group trades at about 18 times free cash flow. So you can do the math and back into what $11 or so reflects in future free cash flow. And somehow you have to get from $1 billion and change up to a substantially higher number, and then assume that GE Capital is zero. And by the way, they were going to raise $50 billion to take care of these issues, GE Capital and debt. Okay, you raised 20. I mean, this doesn't mean case closed. You got a good number for 2% of your revenues when you started this whole process. That does not change the dynamic and the big moving parts around these numbers. So, number one, Power will not flip quickly, and we believe there are structural concerns there. And number two, GE Capital is not a zero. GE Capital is a substantial negative, and if you read through the 10-K from last night, which nobody, once again, really does, there are a number of items, including insurance, that pop out as being significant drags over the next couple of years. So those are being very presumptuous in $10.
What are the structural concerns at Power?
If you think renewables capacity and pricing on renewables and the levelized cost of energy in renewables is going to stabilize and go up in the future, then I think you can probably think about this business having a future. But management has already said that the market will be flat for gas turbines over the next few years, and they are going to be more selective in the projects that they choose, which means that in a flat market, if you're more selective on projects, that your revenue will go down. Will go down.
Oh, Steve. They've got 22,900 employees in renewable, and they got 59,700 in power. What happens if Culp just goes down there and he's a grim reaper and he takes those people out and you get those margins back? The backlog is 16% on renewable energy. It can happen. This is the type of thing that I want you to be right, because you've been so dead right the whole way.
I think you're wrong on this. I think you're wrong on this. I absolutely think you're wrong on this. Their current sales per employee at Power is well above where Siemens is today, i.e., they are running it efficiently. The issue here is if you cut that many employees, and remember, you have close to $10 billion in power services, which you have to grow. How do you cut services? How do you cut employees when you're trying to drive transactional service business? So they're already efficient. They are losing revenue, and if you cut more, you will lose more revenue. And Jim, I don't know if I think you are a finance major, but like without revenues, you cannot have profits, and without profits, you cannot have cash. So you're basically cutting costs and chasing revenues down at the same time prices going down. That is the structural problem.